Ray Dalio stood before the world. He was confident. He had made a big call, a very public prediction about the economy. He announced that a global debt crisis was imminent. He believed the United States was heading for a depression. This was not a quiet whisper. It was a bold declaration. He even testified before Congress. His words carried weight. People listened. They waited. Then, the market moved. It did not move as Dalio predicted. It moved against him, sharply, decisively. His forecast was not just wrong, it was spectacularly wrong. The consequences were immediate. Clients pulled their money. His firm, Bridgewater Associates, teetered on the brink. Long before the public failure, there was a boy, a curious boy from Long Island. Ray Dalio was not born into wealth. His father was a jazz musician. His mother a homemaker. He was an ordinary kid in many ways. But he had an early fascination. A fascination with how things worked, especially money, and the markets. This was not a fleeting interest. It was a deep-seated curiosity. At the tender age of 12, he began investing. He caddied at a local golf course. He heard tips. Stock market talk filled the air. He saved his earnings. He bought his first stock, Northeast Airlines. He got lucky. The company was acquired. He tripled his money. This early success was a spark. It ignited a lifelong passion. He was hooked. He realized that making money this way was thrilling. It was a puzzle he wanted to solve. He devoured books on investing. He studied company reports. He learned about financial history. The market became his laboratory. By the early 1980s, Ray Dalio was making a name for himself. Bridgewater Associates was growing. He was known for his macroeconomic insights. He wasn't afraid to make bold predictions. He studied economic cycles. He looked at history. He thought he understood the big picture. His confidence was at an all-time high. In 1982, Dalio made his most audacious call yet. He predicted that the Latin American debt crisis would spill over. He foresaw a major U.S. banking crisis. He forecasted a deep global depression. He was not just speculating, he was convinced. He advised his clients accordingly. He spoke publicly about his views. He even testified before the U.S. Congress. He put his reputation on the line. He was all in. He felt the weight of his conviction. The aftermath of the failed 1982 prediction was devastating. Ray Dalio found himself at rock bottom. He had to borrow $4,000 from his father just to pay family bills. Imagine that. The confident forecaster, the Wall Street whiz. Now he was struggling to make ends meet. His firm, Bridgewater, was reduced to a one-man operation. Himself. The pain was immense. It was a period of profound darkness. He called it his abyss. He described this experience as like a blow to the head. It forced him to confront a hard truth. He realized that being right was not enough. He had been incredibly confident in his views. From ruin to reflection, the seed of change. Losing almost everything was a brutal teacher. Ray Dalio was humbled, profoundly humbled. He realized that his biggest enemy was not the market. It was his own ego, his own overconfidence. He had believed he was smarter. He had believed he could outwit the complexities of the global economy alone. The market showed him he could not. This realization was painful, but it was also liberating. It opened the door to a new way of thinking, a new way of operating. Building anew, the rise of radical transparency. Ray Dalio knew he couldn't rebuild Bridgewater the old way. He needed a new foundation, a new philosophy. This philosophy emerged from his painful lessons. It centered on two core ideas: radical truth and radical transparency. He believed that to achieve excellence you needed to confront reality, even when it was uncomfortable, especially when it was uncomfortable. This meant being honest with oneself, and being honest with others. Radical transparency meant that almost everything at Bridgewater would be open. Meetings would be recorded, performance reviews would be public, disagreements would be encouraged, not suppressed. This was a revolutionary idea. Most companies operate on a need-to-know basis. Information is power. It is hoarded. Bridgewater's ascent principles forged in fire. With the new philosophy of radical transparency taking root, Bridgewater Associates began its remarkable ascent. The pain of the 1982 failure had forged a stronger, more resilient organization. Dalio and his team focused on building robust investment models. They systematically studied economic history. They looked for timeless and universal principles that governed markets. They were not just guessing anymore. They were building systems. Systems based on deep research and data. One of their key innovations was understanding risk parity. They aimed to balance risks across different asset classes, not just capital. This was a different way of thinking about portfolio construction. Another was the pure alpha strategy. This focused on generating returns that were uncorrelated with traditional market movements. These strategies were born from their commitment to understanding how the economic machine really worked. They were the products of their idea meritocracy, where rigorous debate and testing led to better outcomes. The firm's performance started to reflect this new approach. Bridgewater grew, sharing the code principles for the world. As Bridgewater achieved extraordinary success, Ray Dalio began to think about his legacy. He had codified his decision-making rules and life philosophies. These were the principles that had guided him and his firm. Initially, they were for internal use, a manual for how Bridgewater operated, but Dalio realized that these principles could be valuable to others, not just in investing, but in life, and in any organization striving for excellence. He decided to share them. In 2017, he published his book, Principles, Life, and Work. It became an instant bestseller. In it, he laid out his approach to decision-making. He shared his journey, his failures, his learnings. He explained the concept of radical transparency. He detailed how to build an idea meritocracy. The book was a rare look inside the mind of one of the world's most successful investors. A sage's perspective, guiding through uncertainty. Having stepped back from the day-to-day management of Bridgewater, Ray Dalio has embraced a new role. He is now a mentor, a global thinker, a commentator on the big issues facing the world. His focus has broadened beyond the financial markets. He studies history. He analyzes geopolitical trends. He worries about things like debt cycles, internal conflict within nations, and the shifting global power dynamics, particularly between the US and China. His perspective is sought after. He continues to share his insights through articles, interviews, and his ongoing research. He speaks with a sense of urgency about the risks he sees, but also with a belief in human ingenuity. He believes that by understanding the patterns of history, we can better navigate the future. He emphasizes the importance of principles, not just for individuals and companies, but for countries too. He advocates for thoughtful, principled leadership. The unfolding path. Learning from every fall. Ray Dalio's story is a powerful reminder. It tells us that failure is not an endpoint. It can be a beginning, a catalyst for profound change. His public humiliation in 1982 could have destroyed him. Instead, it reshaped him. It forced him to confront his weaknesses. It led him to develop a philosophy that transformed his firm and influenced the world of investing. His journey is a testament to the power of humility and the relentless pursuit of learning. The principles of radical truth and radical transparency are not just for hedge funds. They are for anyone, for any team, for any organization that wants to improve. They encourage us to look at our mistakes, not with shame, but with curiosity. What can we learn? How can we do better? Gap 3S, the ripple effect of principles. As Ray Dalio's principles permeated his organization, the impact was profound. Employees began to embrace radical truth and radical transparency. Meetings transformed into honest dialogues. Feedback became a tool for growth, not criticism. The culture at Bridgewater shifted. It became an environment where ideas could be openly challenged, where the best ideas won, regardless of their source. This cultural shift didn't just stay within the walls of Bridgewater, it rippled outward, influencing other companies, other leaders, other industries. Dalio's principles became a blueprint for innovation, for resilience, for success in the face of adversity. They showed us that the path to greatness is not about avoiding mistakes, it's about learning from them, about creating a culture where every fall is a chance to rise higher. Outro. Thank you for watching The Fall and Rise of Ray Dalio, a journey of humility and reinvention. If you enjoyed this video, please like, share, and subscribe for more inspiring stories.